for stock dividends and cash dividends. You can either answer cash dividends, stock dividends, or both of them. For A, which of them decreases retained earnings? Cash dividends, and is that all? Is it both? So for cash dividends, definitely we would debit retained earnings, credit dividends payable, and later debit dividends payable, credit cash. What about stock dividends? What do we debit? Also retained earnings. So in this case, it will be both. Stock dividends, cash dividends, both decreases retained earnings at the end. Okay, which one has no effect on liability? Stock dividends has no effect on liability. Very good. For cash dividends, when we declare it, we have dividends payable. Stock dividends, we only have one entry to it when we actually pay out the stock, issue the stock to shareholders. So stock dividends is just, again, a rearrangement of equity. We reduce retained earnings, we increase common stock. So there's no effect on liability account or asset account. Okay, what about C? Which one increased paid in capital by the same amount that they decreased retained earnings? It will be stock dividends, exactly. For cash dividends, it doesn't really affect paid in capital. It does reduce retained earnings, but it increases liability and later eventually reduces cash, which is part of asset. Okay, but stock dividends decreases retained earnings, increases paid in capital, common stock. Remember, because the whole point of stock dividend is to give out stock to shareholders, so it increases common stock. Okay, what about D? Decrease both total assets and total stockholders' equity, resulting in a decrease in the size of the company. Which one decreases assets? And specifically, what type of asset? Come on, this one is easy. Cash, exactly, because cash is part of assets, so only cash dividends, basically you're just giving checks to shareholders. So it reduces asset, and it doesn't affect any other categories besides asset and retained earnings, these two accounts. So eventually it's decreasing the size of the company because you're using retained earnings. Now in terms of stock, really stock dividend doesn't reduce the size of the company. You're using retained earnings, but you're issuing additional common shares to others. Again, the total equity section doesn't change. Okay, it's a rearrangement of equity. So in terms of company, in a way you can think of it as a trickier way to reward shareholders because it doesn't turn into cash unless shareholders sell it back to the market. Okay, but it's still giving ownership to shareholders, so increasing common shares, outstanding shares out there.